Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial update with me, Shikhar Garg. Now, after a whole host of ups and downs and rollbacks and delays, UK budget will be released today by Hunt. While while taking into consideration today's budget, yesterday's release of inflation data would be definitely one of the biggest considerations they would have had. UK inflation has hit 41-year high at 11.1%. On the other hand, ECB seems firming up on the narrative of the likelihood of recession in the eurozone, where Vice President mentioned risk to the financial stability has increased, while the technical recession in the euro area has become more likely. On the domestic front, Indian macros are somewhat mixed with the softening of exports, but a higher capex and credit update cycle seen. Even the deleveraging cycle looks to be like coming to an end. So, JK, there's a lot of things going on in the macro front, while there is a lot of action by the entities across. So, what's your take?
Yeah, good morning. Yes, a lot of data to digest for the markets, and possibly I am seeing the markets stopping uh, in their tracks and assessing whether the reaction so far to the softening inflation, both from CPI and PPI, has gone too far. So we've seen some bit of consolidation in the stocks. Yields are not rising, but they're not falling as well. And the currencies have actually taken a breather. We had the UK CPI, as you mentioned, at 11.1%. That's a record high for 4 decades, and the core inflation was also at 6.5. But the services inflation was rising. The CPI print above the Bank of England forecasts at the November meeting looks that the peak was under 11. That is what they were saying, but it actually is exceeding it. The market is currently pricing in a 40% chance of a 75 BP hike in December, despite warnings from BOE MPC members. But the budget to be presented is also going to add to the difficulties for the consumers, because that there will be higher taxes, because of which there will be a lower disposable income, higher inflation, and the higher interest rates. All said and done, it's a given that England is going to be in a recession, perhaps for a prolonged period of time. The US retail sales increased at a strong pace as per data released yesterday, easing concern that elevated inflation and falling real incomes are squeezing household finances and curtailing consumption. But it is a sign that the Powell may not be liking it yet. So advance retail sales grew at 1.3% versus 1% expected, and the core retail sales, excluding autos, also rose. And so while studying the study opening will be normally considered as a blessing for the economy, it makes the job of the central bank that much more difficult, because the demand side inflation is still on. So unless we have signs that the supply side inflation is actually coming down, the central bank will not be happy about it. The home builders' confidence also deteriorated in November for the 11th straight month, highlighting the current woes in the housing market as higher interest rates bite. All the three components of the index fell, including the current sales conditions, sales expectations, and gaze of prospective buyers. Japanese trade deficit hit another high, exports falling and imports rising, put it down to lower global demand and higher oil prices. So far, yen has not shown much reaction to these numbers, and a month back it would have been in a 1% jump in the USD yen immediately, but because of the stealth intervention that BOG has been ongoingly conducting, markets enthusiasm for the dollar seems to have really ebbed, and especially with the US inflation started to drop, and the impact on the yields as well. Geopolitical concerns slightly ebbed as the day wore, particularly after initial reports from the US agencies confirmed that the missile that hit Poland may not have come from Russia. Of course, Poland is obviously taking it very seriously and calling for a meeting of the NATO members, very soon. None of these have had a lasting impact on the euro or the sterling, at least till yesterday night, which stayed firm, holding on to their most of the gains. And structural shorts in these currencies are actually weighing on the dollar. Not if the good data inspire yields or stocks higher, with the slight uncertainty creeping into the policy moves by the Fed, and most Fed speakers remaining on the hawkish side still, and then ruling out any near-term pause. So keeps the dollar somewhat in the middle ground, although euro and GBP are now showing a bit of tiredness, and I see retracement to these currencies, particularly as we head into the UK budget presentation today. COVID cases are on the rise in China again, 20,000 plus yesterday. And this is happening after Chinese authorities announced some relaxations. Now the fear is whether they would reverse some of those relaxations, looking at the big rise. So the Chinese one, again, more than 1% higher from the levels seen yesterday. Interestingly, Republicans are now projected to win a majority in the House of Representatives, gaining control of the Congress in the lower chamber, after 4 years of democratic rule. It confirms the historical trend that the party in power generally does not retain control of the lower house, and after the term. So this is only a projection from the major news channels, and the final tally is yet to come, as as the votes are still being counted in some of the more closer races. So it's going to be again a busy New York session as far as the data is concerned. A slew of Fed speak, plenty of Treasury auctions as well. On the data side, we have weekly jobless claim, Philly Fed manufacturing survey, and new residential construction data. And of course, before that, all of us will be glued on to what Hunt has to say and how the GBP reacts to it. In my view, GBP has had a huge positive reaction after the major political changes and the reversal of the mini budget. But that means markets will reassess whether the oncoming recession and the higher interest rates is likely to put the pound, really worth being strong. As someone has mentioned in the BOE itself, while the import costs have reduced because of the stronger pound, it has not actually helped the exports. So does it mean that they would revert to more weakness in the pound, or any other boost to the sector? That is something to be seen. Rupee has been generally following the trend of the Asian currencies, most of them having fallen, rather having gained a lot in the wake of inflation data, now reversing course a bit from the very important support levels. So in USD INR now seems to have found good support below 81, and on a dip we are seeing good import covering. What is also helping the importers, or rather encouraging importers to cover, is the premiums which have stayed at multi-year low. So it is a very rangy market as far as the dollar rupee is concerned so far, but more gains for the dollar in other currencies in retracement could push the dollar rupee above the near-term resistance at 81.55 and possibly move towards 81.80 today or tomorrow. Thank you.
Okay, quite wonderful, JK. And yes, I really like the question where you mentioned the question is whether the supply side inflation is going to come down or not, and that's something we need to be tracking, as all the other set of inflation data looks to be softening. On the other hand, yes, Japanese trade deficit was yet another poor data release on the macro front after the sliding or the shrinking GDP. But on the domestic front, folks, as JK mentioned, rupee looks to be, in sync with the Asian currencies, and as the rest of the currencies have found the major support and are now in a reversing trend, we can expect USD INR to do the same. So, folks, keep managing your risk. That's it for today, and we shall come back again tomorrow with another round of updates just for you. Thank you so much for listening.